Every year, your employer sends you a document called a P60. Most people glance at it, file it, and forget about it. That's a mistake, because your P60 is one of the most important financial documents you'll ever receive, and not understanding it could cost you. In this video, I'm going to walk you through exactly what a P60 is, what every field on it means, what you should use it for, how to check it's correct using our free calculator, and what to do if you've lost it. So let's start with the basics. What actually is a P60? It's your end-of-year tax summary. It's issued by your employer, not HMRC, and it shows your total gross earnings for the tax year, plus every deduction taken from your pay. Income tax, national insurance, student loan repayments, and any statutory pay like maternity or sick pay. The tax year runs from the 6th of April to the 5th of April the following year. Your employer must give you your P60 by the 31st of May after the tax year ends. Many employers now issue them digitally through payroll portals, so check there first if yours hasn't arrived. And one important thing, you only get a P60 if you're still employed at the 5th of April. If you left that job during the year, you'd have received a P45 instead. Now let's go through the form field by field. Field 1 is the tax year. This confirms which pay year the document covers, for example, April 2026 to April 2027. Field 2 is your employee name, split into surname and forename. Field 3 is your national insurance number. This is your unique personal reference for tax and benefits. If it's wrong on your P60, contact your employer straight away. Field 4 is your works or payroll number, your employer's internal reference for you. This isn't used externally, so you don't need to worry about it. Field 5 is pay in previous employment. If you change jobs during the tax year and handed in your P45 to your new employer, your earnings and tax from that earlier job will show up here. This is one of the most commonly misunderstood fields. It does not mean pay from previous tax years. It only covers earlier jobs within the same April to April period. Field 6 is pay in this employment. This is your total gross pay from your current employer during the tax year. It will match the year-to-date figure on your final payslip before the 5th of April. Field 7 is the total for year. That's fields 5 and 6 combined. If you only had one employer all year, fields 6 and 7 will show the same number. Field 8 is your tax code at the 5th of April. Most people will see 1257L here, which corresponds to the standard personal allowance of £12,570. If yours is different, it's worth understanding why. Field 9 is the section most people find confusing, national insurance contributions. This is laid out as a grid with several columns, showing your earnings in different bands, your employee NI contribution. The employee NI column is what matters for your take-home pay. In 2026/27, the employee rate is 8% on earnings between £12,570 and £50,270, then 2% above that. Field 10 is statutory payments. If you received statutory maternity pay, statutory paternity pay, shared parental pay, or statutory sick pay during the year, the total appears here. Field 11 is student loan deductions, the total repayments taken from your pay across the year. This only appears if you're on a repayment plan and earning above your plan's threshold. Field 12 is your name and home address as held by your employer's payroll system. Field 13 is your employer's name and address. And Field 14, the one people forget about, is the employer PAYE reference. This is a code in the format of 3 digits, a /, then letters and numbers, like 123/AB456. You'll need this when you contact HMRC about your tax record, claim a rebate, or complete a self-assessment return. So now you can read your P60. But what should you actually do with it? Keep it. HMRC recommend keeping your P60 for at least 4 years. As soon as it arrives, scan it or download it. Here's why it matters: mortgage applications, rental references, visa applications, self-assessment returns, tax rebate claims, universal credit, and your state pension record all rely on figures from your P60. Without it, you have a problem. Now, here's something most people don't do. Check it. Payroll errors happen. If your income tax or NI figure is wrong on your P60, it can affect your tax record for years. The quickest way to check is to use our free P60 calculator. Take your gross pay from field 6 or 7, enter it into the calculator along with your tax code from field 8, your student loan plan if you have one, and your region. Hit Calculate. The calculator shows your expected figures: income tax, national insurance, student loan, laid out in exactly the same field order as your actual P60. On a salary of £35,000 with a standard 1257L tax code, the expected income tax is £4,486 for the year. Employee national insurance is £1,794. Add a Plan 2 student loan, and the annual repayment comes to £693. If your P60 shows something significantly different to those calculated figures, contact your payroll department straight away. What if you've lost your P60? Your employer is not legally required to give you a replacement. Once the original is issued, it's considered delivered. But you do have options. First, check your payroll portal. Most large employers now make P60As available to download digitally. Systems like Workday or Bamboo HR usually have them under your documents section. If that doesn't work, ask your payroll or HR team. Employers are required to keep PAYE records for at least 3 years, so they should be able to help. You can also contact HMRC directly, either through your personal tax account online or by calling 03002 003 300. They can provide a statement of earnings, though it's not in the same format as a P60 and may not be accepted everywhere. Or we can help at OS Payroll. We provide professional replacement P60 documents. There's a free sample before you pay anything. And finally, the P60 versus the P45. They're often confused. Your P60 comes at the end of the tax year if you're still in the job. Your P45 comes when you leave a job. The P45 covers your earnings up to your leaving date, and you hand it to your new employer. You cannot use a P45 as a substitute for a P60. Mortgage lenders in particular will specifically ask for P60s. Our P60 calculator is completely free, no sign-up needed, and there's a link in the description. Give it a bookmark. It's the quickest way to check your figures every year when your P60 arrives. If this was useful, please like and subscribe. We cover everything about UK pay, tax, and payroll. See you in the next one.